Good morning, everybody. This is the live market open for Friday. Finally, it's Friday, March 18th. We had so many storms in markets, mostly due to the Fed's actions. I see quite a few of you in the room. Of course, your questions will be the highlight as usual. If you can't see the chat box under the screen or beside the screen, beside the video, please go to the address here, tlk.io/fxrate-forex-live-video. We'll talk about, of course, recent developments, various charts and levels, the next less than 24 hours. And as usual, what we do on Friday, we'll do a preview for next week's events. Okay, so what's going on in markets in general? The dollar crash. All currencies are winners. We'll talk about all of those. And oil, WTI crude oil, managed to top $40. It's all good atmosphere. Until basically this morning, when we're seeing some kind of a correction, okay? So before we look at the charts, let's talk a bit about the events we had yesterday. The Swiss National Bank does not do anything. We covered this during the show yesterday. They left the interest rate, important one, and changed it minus 0.75%, and they will continue intervening. No change from there. The Bank of England was slightly dovish. They also specifically warned about the uncertainty regarding the referendum, so they did go there. They did mention it. They did add their political weight, so they went a bit further. But the pound is the winner because the dollar is a loser. Anyway, regarding U.S. figures, we had jobless claims. They were okay, 267. Philly Fed index showed another beat in manufacturing, significantly better than expected at 12.4. This adds to the New York, the Empire State figure. Okay, U.S. JOLTS figures. This is a job figure that also is related to the that is closely watched by the Fed. It's a bit stale. It's for January. Anyway, it was okay at 5.54. And there was a miss on the current account. All in all, the figures were okay. Nothing to really... these weren't top-tier figures like we had inflation or retail sales earlier in the week. And of course, the Fed decision. So before we talk about today's events, let's look at the charts. Okay, so as I mentioned, we had yesterday an ongoing extension of this dollar strength, dollar weakness, and now we're seeing a correction. So euro dollar, you can see here how it basically has the same pattern. This is the slide towards Draghi's backfiring announcement. Then we had another slide right here, and now we have this Fed this week, the Fed decision that was extremely dovish. Much more dovish than expected. Perhaps we'll have time. We'll discuss once again why it was so dovish. And we had the first resistance battling 112.15, but then it broke above 112.50, reached a high almost of 113.50. Now it's sliding back down. It's already this morning 40 pips down, already fell beforehand. Anyway, 113.75 for me remains really key resistance, not the recent top of 113.50, support at 112.50. So now we have a slide. It's not the euro alone, even though we did have a comment from an ECB official saying that they might further reduce rates. Of course, if things worsen. By the way, also Draghi said that, of course, for now they stopped cutting rates, but it can always change later on. Anyway, but what I wanted to say, it's not only a euro weakness, it's dollar recovery across the board. In comparison to the crash, this is a very, very small recovery. So here we have dollar pound. It reached the round level of 145 yesterday, ignoring the Bank of England, ignoring what we had early in the week, more austerity from the British government, they cut growth forecasts. So the situation in the UK isn't so positive. I mean, the trend, not the actual situation, is not that bad, but the trend is quite negative. The uncertainty is weighing, but the pound did manage to move higher. Now it's finding support, at least for now, at 144.40. Let's see if it breaks below. I'm pointing out 144.40 because this was a level worth watching, well, just a week ago or so. Below this, we have 143.65. and 142.80. Okay, we had it bounce on the budget just this week, okay, at 140.50. All right, so there we have it. Quite an impressive rise in the pound, and now it's beginning to recover. Good morning, everybody. Dollar yen, this was for me quite a surprise, because if things are really good in markets, that means risk-on atmosphere, commodity currencies are higher, oil prices are higher, stocks are higher, but the yen is a safe haven, right? So why did it fall again? Anyway, we had it fall below the double bottom of 111. And if we look closely at the charts, or if you watched markets yesterday, you can see there's quite a spike here at 111. This is suspicious. There were rumors that the Bank of Japan is checking prices or even intervening. I'm not sure if it was if it was real intervention that happened. If we go to the 15-minute chart, we can also see here, well, perhaps it looks a bit less sharp, but yeah, we can see it right here. Yeah, no, here it looks quite sharp. This bounce around midday yesterday of dollar yen. Okay, so this could be intervention or rumors about intervention. That's good enough to boost dollar yen. The Bank of Japan did intervene many times in the past. So anyway, I think that for me, this break below 111 is still a false break. So I think it still provides support. Further resistance, 112.20. So it's extreme dollar weakness that even the Japanese yen celebrates against the dollar. Usually they are the losers together or the winners, okay? Dollar CAD perhaps reached its limits. We had it break under 130 yesterday during the show. There's really good strength of the Canadian dollar. It fell to a low of 129.60 more or less, and since then we're battling the 130 line. So we had an additional rise in oil prices, but dollar CAD did not extend the falls. Remember, 128.30 is the next level. Yeah, see here some comments. Yeah, Kuroda is, I don't think he jawboned yesterday. He speaks in Parliament a lot, almost every day, but this specific move in dollar yen did not come when Kuroda was speaking. It was just rumors. Either traders in Tokyo or the Bank of Japan spread the rumors. I don't really know, or they really intervened. Another comment here is cable over or undervalued. I think it's a bit at the moment. It's a bit overvalued because it only enjoys the weakness of the US dollar. It doesn't have internal fundamental reasons to rise. Talking about the pound. Okay. So back to dollar CAD. We had this extension of oil prices rising higher and the Canadian dollar failing to extend the moves. Remember, just in mid-January, dollar CAD was almost at 147. So here we are, 1,800 pips, 1,800 pips lower. All right, look at this spectacular fall. And yeah, 1,828.30 is further resistance. We're not there yet, but it's beginning to slow down somewhat. Today we have some figures from Canada. Okay, Aussie dollar. Here we did see some healthier move to the upside. Let's mark this new line here as resistance. 78.40 is the next resistance from the past, but from the near, from yesterday, it's, well, 76.80. Okay, now we're sliding once again. Again, this morning, the US dollar is on the move, trying to recover. I wouldn't call it a turnaround, and I wouldn't call it a recovery yet. Sorry, only a correction. We'll have to wait and see just a bit more. And we have another interesting figure and to see the trend. We'll talk about the general trends again later on. Dealer chatter, the Bank of Japan was not checking rates, but asking why the yen was moving like it did. Yeah, but that's enough to move markets. All this dealer chatter, and they don't know. Even if the Bank of Japan asks a question, if the Bank of Japan talks about the yen, when the yen is strengthening so much, traders might think, rumors might spread that it's about to act, okay? Because markets are sensitive. I mean, these are sensitive times. Kiwi dollar now falling back to support at 68.20. It went all the way. It didn't reach resistance at 69. It did go a bit higher to 68.70. Okay, we had better than expected GDP figures in Switzerland. Sorry, I'm already talking about the next pair. In better than expected GDP figures in New Zealand. But on the other hand, earlier this week we had disappointing milk prices, the falling milk prices. Okay. Now let's talk about the Swiss franc, dollar Swiss. Well, like we're seeing in other currency pairs, we're seeing some kind of a recovery here from the lows, and we fell quite a lot yesterday. Okay, we're still under 96. We fell to support the old support line of 96.40. Still worked quite nicely. This is quite a spectacular fall. This mimics the rise of euro dollar. Okay, so we had it slightly. Okay, the Swiss franc weakening against the US dollar towards the Fed, and then boom, one move and the pause at 97.50, and then another spectacular fall. Okay, so this reflects the dollar weakness. Now again, this morning recovering just a bit. Euro Swiss very much in range. Well, it did fall a bit yesterday during the show. It got stuck around 109.80. Now it's 109.35, so 50 pips could be a lot for Euro Swiss, but anyway, we're at the same old levels at the 109 handle. 109 to 110 would be the range. Let's move on. 78.17 is the current level on euro pound. Euro is weakening. Well, the pound had a quite an impressive rally yesterday. In my opinion, not really justified. Anyway, we fell back from took the pair a lot of work to break above 78.50. We went almost to the previous high of 79.30. You could see this as a lower high if you wish. On the other hand, here we have a higher low. So anyway, 77.40 and 78.50 are the lines I'm watching here. Euro yen, very much in range. 125.50 still working as support, 127 as resistance. Both currencies strengthened against the US dollar. This used to be the safe haven pair. Now it's just the dollar against the rest. So these currencies are sort of stable against each other. What's common to these currencies is that in the past week, both central banks had rate decisions, and both don't like the strength of their currencies. At least against each other, they are stable. Pound yen managed to recover just a bit above 160. The 160 line is not that strong anymore. 158.50 is support, followed by 156.10, resistance 162.20 and 163.80. It's quite surprising to see relative stability in pound yen, the dragon, one of the wildest pairs out there. And perhaps one of the biggest stories of yesterday, we talked about this in the context of the Canadian dollar. Oil prices continued rising. It's not only the dovish Fed, it's also talk about an agreement to meet in Doha, the capital of Qatar, on April 17th to discuss a cut of oil production. It's a decision, it's a meeting between OPEC and non-OPEC members. And another story that is developing is that the US shale industry is finally cutting back on production. It has shown a lot of strength, a lot of resilience, but now it's beginning to slide. But again, this industry is quite flexible. If oil prices continue rising, they could begin pumping from idle rigs once again, and we could see prices falling once again. Okay. Anyway, quite fascinating markets, I would say. This crash of the US dollar, and now an attempt to recover. Again, the ECB and the Bank of Japan don't really like it. Okay, well, as I speak, this correction, the strength of the US dollar is not going anywhere fast. We're seeing in the past few minutes a bounce from the lows in euro dollar, not something really significant, but 20 pips off the lows. So this correction of the US dollar is not really huge. Okay, let's look again at one of my favorite things, the implied probability for rate hike in the United States. April, nobody expects anything, of course. June, before the Fed meeting, we had around 50-50, even a small chance of a hike in June. It deteriorated since then. It continued deteriorating. Now it's only 40% chance of a hike, 60% no hike. So according to bond markets, once again, a hike is only on the cards in September. And remember, we have elections in the United States in November, so markets are skeptical. The Fed was so dovish. Yeah. Okay, let's continue to events we have today on the agenda. We had German PPI, the Producer Price Index. This is the FX Read calendar on Forex Crunch. Figures came out worse than expected. Maybe that also hit a bit the euro, but it's not such an important figure. It's the Producer Price Index, not the Consumer Price Index anyway. Prices fell at 0.5% month over month and 3% year over year. Deflation is still an issue in the European Union, in the Eurozone, sorry. Okay, we have at 12 GMT some report from the Bank of England. It's not that important. We had the rate decision yesterday, which was more important and didn't do much. And more importantly today, we have a double feature from Canada. Okay, I know not many of you are trading the Canadian dollar, even though it's worth watching. It's worth, there are very nice moves there. Anyway, we have both inflation and retail sales from the Bank of Canada. Consumer price index year over year is expected to stand at 2%. It's year over year, I think, is more important. And yeah, and here we have 0.5%, sorry. And core inflation also at 2%. Let's see if this is maintained. It's not too shabby. One of the things that helped Canadian inflation is the fall of the Canadian dollar, which is significantly reversed. Anyway, these are figures for February after the bounce of the Canadian dollar, but not a full one. Let's see if we have lower inflation in Canada. And we also have retail sales, could be more important. So retail sales in Canada, month over month, are expected to rise 0.4 after, sorry, that's excluding autos, excluding cars, 0.4 after a big fall of 1.6. And the headline figure also expected to rise 0.6 after a drop of 2.2. This should perhaps help the Canadian dollar push forward. As I mentioned before, it's stuck. Okay, we have here a comment, quadruple witching today, so don't expect normal FX moves today. Yeah, option expiries, triple, quadruple witching. It could mean a lot of crazy movements at the beginning, the middle of the US session. So thanks for that comment. We could certainly have wild stuff going on. Let's see how things develop. I'm not sure. Well, we have so many factors moving markets. Anyway, I would watch out today for well, in the United States, we do have important stuff today more than yesterday. So we have, here's the calendar again. I have a speech by Bill Dudley, number 3 at the Fed, the president of the New York Fed. He's a known dove, okay? Let's see if he's really that dovish, okay? Let's see if he confirms the dovish tone we heard from Yellen and from the statement and from the dot plot, everything on Wednesday. So he speaks at 1 GMT, 2 p.m. here in the old continent. At 3 here in Europe, 2 GMT, we have the preliminary consumer sentiment figure for March from the University of Michigan, Reuters. Okay, a small rise is expected from 91.7 to 92.2. Remember, this is well, the positive thing about this indicator is that it's very forward-looking. It's for the month of March, and it's supposed to tell us that how consumers are going to spend this month, how they spent so far, and going to spend towards the rest of the month. Okay. So that's supposed to tell us something. Okay. Let's see how things really evolve over there. But on the other hand, the correlation is not that clear. At 3 GMT, we have another speech by Rosengren. He's the president of the Boston Fed. Okay, he is also a dove. Let's see if he also continues the tone that we heard in the past. Well, please do something about the clarity of your screen. It's super blurry. Barely see anything. Well, maybe this would be better. Smaller font, but I hope it's better. Anyway, okay. Thanks for you guys helping each other here on the quality of the screen. Anyway, what I was saying is we have another speech by Rosengren at 3 GMT, and as usual, on Friday we have the Baker Hughes oil rig count. It's becoming more important now that oil rigs are really falling towards the bottom. So that's expected as usual at 5 GMT. Let's see if oil rigs continue falling. They stood on 386. As you can see here, the chart is quite clear. Every week we have less and less rigs with very minor corrections. Okay, so less rigs until some point did not mean less production, because the less efficient rigs were thrown out and the better ones were used, so it wasn't that bad in general. But now it's become also the ones that are producing lots of oil. Some of them are shut down. Let's see if this trend continues. 386 is quite minimal. Okay, and last but not least, this time a speech from, not from a dove, but from a bull, if you wish, from a hawk. James Bullard of the St. Louis Fed will be speaking at 6 GMT. So all these Fed speeches can help us understand what's going on. Okay, here we are, euro dollar back 112.90. We'll have here a few comments. Okay, helping each other with the screen. The ECB voted to axe the 500 euro note. So circulation of 500 euro notes totals over 309 billion. So with less fat circulating, help push the euro up. I'm not sure it'll have such a material impact, especially as the ECB is buying so many, well, printing so many euros, new euros, and also buying bonds. Remember that it's not, this money doesn't really disappear. If you have a 500 euro note, you can just go to the bank and replace it for other notes, okay? Of course, some of this money is dirty money used by, well, drug dealers or whatever. But so some of it will disappear. Some of it will be hard to recover, right? Because these people could get caught. But a lot of this money is legitimate. So and a lot of it is just parked in banks. So if you have, don't know, if the bank holds in the storage, in the safe, notes of 500 bills, it'll just make sure it changes them with the ECB in some manner to 100 euro notes or 50 or 200. So I don't think it'll have such an impact. Anyway, these 500 euro notes are phased out gradually. So I don't think we'll have an impact from there. It's mostly an attempt to catch the bad guys. And well, many countries, these 500 euro notes were controversial for a long time. Anyway, let's see if I didn't miss any important event for today. No, we talked about the events. Should add here a speech by Dudley. Anyway, guys, have any other questions? Dirty money, yeah, that's the idea. Get rid of the dirty money. Let's before we talk about next week's events, we'll do that after the wrap-up, which comes later on. I should have here again a reminder of what we had from the Fed. So what was not surprising from the Fed is that the dot plot showed only 2 rate hikes, okay? They showed 4 rate hikes expected in 2016, this year, back in December when they raised rates. Everybody knew it was exaggerated. Since then, markets deteriorated. By the end of December and January, things got worse. But in mid-February, things began turning around. Oil prices began rising. Economic data in the United States improved. Sentiment became better. The ECB promised to act. The Bank of Japan introduced negative rates. There was a sense that things are getting better. So everybody expected, so things did improve since then. But anyway, they were still expected to cut their projections, the path of rate hikes to 2 rate hikes, okay? What was surprising, well, for markets in general, is that the Fed is still worried about global developments, okay? Things have stabilized. China introduced more stimulus again. The ECB, markets improved. Things don't look that horrible anymore in the past month, but they still are worried. In addition, the thing perhaps that surprised me most is that on the day that inflation came out better than expected, core CPI at 2.3% year over year, which is above the target, they decided to cut their inflation forecasts. Okay, now therefore their inflation target is not the core CPI, but the core PCE price index, another measure, which is lower. Nevertheless, inflation in general looks to be rising, so they slashed it from 1.6 to 1.2. I was really surprised. In addition, they characterized business investment as soft, also surprising given the rise in core durable goods orders, which also reflects investment. And also they talked about exports and the fact that for change we had one hawkish dissenter. Esther George also shows us that, well, at least she was a bit also surprised by the dovish sentiment. Okay, the dollar crashed in the immediate aftermath in Tokyo in Europe. And one idea, one explanation, potential explanation I've heard about that, I read on Forex Live, Adam Button wrote that he suspects that in the G20 meeting, there was some kind of a joint decision that the Fed should also lend a helping hand. Well, this is possible. We really don't know that. We know about the dovishness of the Bank of Japan and much more so of the ECB. We know of China's stimulus. They cut the reserve requirement ratio and they pledged a growth target of 6.5% at least in the next 5 years. We do know about all that, but if you look at it, we have many central banks on the path to loosening monetary policy, more stimulus, negative rates, QE, you name it. And we only had the Fed on still on track, very gradually, very data dependent, of course, to raise rates. So perhaps, and the Fed is, of course, the most important central bank. So the suspicion is that they were told, they were pressured, Yellen, and probably by her peers in central banks and finance ministers, including maybe Jack Lew, the US finance minister, to change course, and they went very dovish. I'm not sure this theory is true. Of course, you don't have real information about that, but it's certainly possible. And another theory is that they don't like the fact that the dollar is rising. And another theory is that they're just moving very slowly, and they're still stuck in the doom and gloom back in January and February, early February, not in the current situation, which looks better. Okay, so these are potential 3 theories: the dollar, the G20, and that they're a bit stuck in their academic ivory tower to explain what happened. More comments here. Do you think that the dollar will go higher, or was that the maximum? I don't know. I think that at least against the ECB is not happy, and the Bank of Japan is also unhappy with the strength of their respective currencies, and they don't like to see such a weak dollar. We will hear more job owning from Kuroda, perhaps from Draghi, from other members, via either directly or through press leaks, reports, whatever you name it. Okay. So I think the battle still goes on. I'm not sure. I think the dollar could recover, but it doesn't look good, even with this correction that we've seen just now. Things don't look good for the US dollar. Let's take another look at the charts. Yeah, a very mild recovery. Yes, we had a recovery, but in the bigger scheme of things. So this is the euro dollar before the Fed, sliding from 112.15 to 110.70, 110.60, all the way to 113.50, and now a small correction. We'll need more developments to help the dollar or to weaken the euro. Comment here. I believe that emerging economies are leveraged up with the hilts, up to the hilts with dollar. Yeah, because that's true. Because the dollar had a low interest rate for a very long time in the United States, and it seemed like it would go forever. And with the Fed's QE programs, 3 QE programs, it was very cheap to lend in dollars, and now interest rates are a bit higher, marginally. More importantly, the dollar is stronger, so that hurts emerging economies. A few other developments in markets. In general news, we have political issues in South Africa, and more importantly in Brazil, with huge protests on the street because of corruption. But everything is also related to the commodity slump and the deterioration of the economy. Okay, so if we're talking about the big emerging markets, these ones are suffering. Of course, also Russia is suffering. India is doing relatively better because it exports more services and imports oil. That means, and its growth rate now is higher than China's. Okay. The yuan aspect to the US dollar, a cheaper dollar would help China catch up and the mood worldwide would improve. Yeah, it's not a full peg, but and when people warned about the devaluation of the yuan, it wasn't a huge devaluation of the yuan, it was very marginal, and the fear was that we could see further devaluation and capital outflows. I don't remember who said that, but there has to be a better decoupling of the yuan from the US dollar, not only these marginal moves, because as you said, it's quite pegged. So we could see, weaker dollar means a weaker yuan, makes China more competitive against Europe, makes China more competitive against Japan. And that's another reason that the Bank of Japan and the European Central Bank don't like it. It's not only the United States, it's also not only the number 1 economy in the world, the United States, but also the number 2 economy, China. Okay. So the big event of the week, the Fed decision, certainly did not disappoint. That was a huge move. Okay, more questions. Let's look at the charts once again. We'll soon reach the wrap-up, and immediately afterwards, the preview for next week's events. Oil prices are still holding on above $40. WTI crude oil, but it's flirting with lower levels, sliding once again from the highs of 40.50. All right. So here we are. Let's see if I didn't miss anything on the agenda before we reach the wrap-up. Another comment here by Fabian. I was thinking to submit you this suggestion. On Friday, why don't you do a summary of the past week and then refresh it on Monday, like the preview that you already do for the next week, but summarizing what happened in the past week. You did it today for the FOMC, but I mean a complete overview of significant events for each currency the past week. I would definitely follow it twice, both live on Friday, and then I would listen to it again during the week. On the weekend to ponder about fundamental. Okay. I don't have the slides prepared for today, but this is certainly a good suggestion, and let's see if we can push it on on next Friday. Okay. Of course, I followed. Yeah, I follow. I repeated what happened with the Fed because that's really a huge, huge event. Okay, but thanks. That's a great suggestion. I already deleted, I think, the. Yeah. Yeah, it's a bit of a mess here. Yeah. Good idea for next week. Before we move to the wrap-up for today, another question here. Do you think dollar CAD is going to strengthen more? It looks like it lost momentum to the downside. It couldn't fully take advantage of the fall in oil prices. This fall is, of course, this rise, sorry, in dollar CAD is related to the current strength of the US dollar, this kind of small correction. But in general, what we've seen from it yesterday is that it couldn't extend the falls. So everything, of course, depends for today on the Canadian figures that come at 12:30 GMT. Okay, let's do a wrap up for today. This is the wrap up for the live market open for Friday. Happy Friday, March 18th. So far, the dollar crash extended after the Fed yesterday with big falls of the US dollar across the board, including the Japanese yen, and WTI crude oil with the good atmosphere topped $40. Currently, this morning, we are seeing some kind of a correction with the US dollar. Corrections are necessary. I cannot say at this moment that this is a change of trend. It doesn't look so. Events we had yesterday, the Swiss National Bank did not do anything, pledged to continue intervening and left rates unchanged. The Bank of England was slightly dovish. They did warn about the referendum. That for me is sort of going even more dovish, but with the crash of the US dollar, this was didn't take center stage. US figures were basically balanced. Jobless claims were okay. The Philly Fed was better than expected. Jobs were okay, but with the downwards revision. And the current account missed, all in all, quite balanced. Today we do have a top tier figure, not like yesterday. Anyway, let's talk about the events today. We had German PPI missing expectations earlier. For those trading the Canadian dollar, it's a big day. We have both CPI and retail sales. In the past, retail sales overshadowed CPI, overshadowed inflation. Let's see if it happens once again. We had terrible retail sales figures last time. Maybe this time we could have a recovery. I mean, that's what's expected, but also inflation is important. We have quite a few Fed speakers. We have Rosengren at 3, Bullard at 6, and not here on the slide, but we have Dudley also at 1 GMT. At 2 GMT, we have the consumer sentiment, the early release for the month of March. It's expected to rise just a bit and to imply better retail sales, but you never know with these figures, and later on these are revised. Even though this figure is not the most reliable one, it certainly has a market impact. So let's see if the Fed speakers remain dovish like in the statement. Rosengren and Dudley are known doves, but Bullard is a known hawk. And let's see if the consumer sentiment, what it tells us, we could have a wild close to a wild week. Now let's look at the charts and show you what I was talking about beforehand. Euro dollar now sliding from the highs, reaching the lows of the day, but still on high ground. Yesterday it almost touched 113.50, high resistance 113.75, support 112.50, further support 112.15 and 110.70, high resistance 114.60 if the dollar resumes its crash. Pound dollar 144.40. This works as support but could break. 145 is resistance, followed by 146. On the downside, we have 143.65 and 142.80. Dollar yen still has support at 111. Suspected intervention by the Bank of Japan yesterday after. Remember, 111 is a double bottom. We did have a break under it, but it was very short-lived. Currently 111.32 resistance at 112.20. Dollar CAD looks that it lost some steam. I mean, the Canadian dollar It couldn't rise too much on oil breaking 40. Still battling the 130 line. Low support, very strong support at 128.30. Was a clear separator of ranges, and resistance at 131.70. We have key Canadian figures today. Aussie dollar off the highs, but still above 76, 76.20. The high was 76.80. Australian dollar had a not so convincing employment report, but yesterday, but it still looks good. Things look good in the land down under. Kiwi dollar enjoyed a positive GDP figure, but earlier in the week, milk prices were disappointed. Anyway, now we're breaking below the 68.20 line that capped the pair early in March. Support at 67, high resistance at 69. Okay, these are the main currency pairs. This is the wrap up for today. I'll soon begin the preview. Okay. This is the preview for the week beginning on March 21st and ending on Good Friday, Easter, March 25th. Okay. This isn't as busy as a week as we had this one or in the previous one. On Monday, we'll still have echoes from the Fed. This was a huge dovish statement this week, and this will continue reverberating through markets. On Tuesday, we have lots of German surveys. We have the IFO, the ZU, and in addition, we have markets PMIs for Germany and for other countries. I think it'll be a very busy morning for the euro. We also have UK inflation figures. Let's see if headline inflation remains around zero, if core inflation manages to rise or not. The pound, I think, is still vulnerable, perhaps less against the crashing US dollar, but against other currencies. On Wednesday, as usual, we have oil inventories in the United States. And we have a busy Thursday. We have retail sales in the United Kingdom. Always a market mover, even if short-lived, it moves markets in the 30 minutes before the release and the 30 minutes afterwards. US durable goods orders. This is a top-tier release because it reflects investment. The Fed is worried about soft investment. As usual, we have jobless claims. And on Friday, it's Good Friday. Most markets are closed, but not the United States of America. Let me see if I didn't miss any event for next week on Friday, March 25th. Yeah, as you see in Europe here, most countries are on holiday. Spain, Germany, also New Zealand, Switzerland, Canada, Australia, but not the United Kingdom and not the United States of America. Yes, I did miss an important event. It's the final GDP read from the United States. It's not as important as the first release or the second, but we often have big changes. Revisions are quite common in the United States. So we're expecting, we don't have updated expectations, but last time it was revised to the upside to 1% annualized growth. And we have a few peripheral figures, a few related figures, the core PCE, which the Fed watches, and the PCE in general, the personal consumption expenditure. And yeah, but this is the main figure, US GDP. It comes on very thin liquidity. This means that if it's a big surprise, either to the upside or to the downside, it could have a significant impact on markets. Okay, that could be corrected in the following week, but it's still quite meaningful. All right. Before we head off into the day, let's look again. Euro dollar, still pushing lower because of because the dollar is correcting across the board. Now I see here the question: are these your support resistance lines, or do you get them from a different source? No, these are absolutely my support and resistance lines. In general, Forex Crunch focuses more on fundamental analysis, the big things that moves markets, and I guess as you've seen in the show, I talk a lot more about that. And I do I don't totally discard technical analysis. I think it's useful for entry and exit points yeah, but but the big things that move markets are fundamentals. Okay, so these are my lines. The approach is quite simple and straightforward. It's not. Maybe I have often too many lines, but it's not. Certainly not modern art where you see many oscillators, RSIs, you name it. I focus only on support and resistance. Okay, so that's it for today. We had the preview, we had the wrap up, we had 2 extremely exciting weeks in March, the ECB and the Fed. Next week might be a bit more boring, hopefully not, but thinner liquidity towards Easter could mean that on surprises we might have big moves. Anyway, as they said in Roman times, we were the Ides of March. For the dollar, it was certainly the Ides of March certainly hit the dollar hard. Okay, so let's see if we have more developments today. Watch out also for various statements because not only the Fed watchers that we have today, but also the ECB and the Bank of Japan might want to say something about the current strength of their currencies, which they don't like at all. Okay, so that's it for today. Thank you very much, everybody, for coming, for the great questions, the great suggestions. And have a great day today. Enjoy the weekend, and I'll see you all on Monday. So that's it for today. Thank you, and bye-bye.